Starting a new business is an exciting journey, but one of the most significant challenges entrepreneurs face is securing the necessary financial support. The good news is that in 2024, there are numerous options available to help startups get the funding they need. This video will explore 10 easy ways to secure financial support for your startup, providing concrete figures and relevant links to resources you can use. 1. Personal savings and bootstrapping. One of the most straightforward ways to finance your startup is through personal savings. Bootstrapping involves using your funds to cover initial expenses. This method allows you to maintain full control of your business without external interference. Suppose you have saved $20,000. You can use this to cover your startup costs, such as purchasing equipment, marketing, or initial inventory. Many startups can get off the ground with as little as $5,000 to $50,000 depending on the industry. For more information, check out Investopedia's article on bootstrapping. 2. Friends and family funding. Another easy way to secure initial capital is by reaching out to friends and family. This option often comes with flexible repayment terms and lower expectations compared to other sources. You might ask for $10,000 from a family member in exchange for a small equity stake in your company or as a simple loan. Many startups raise between $10,000 to $100,000 from friends and family. For more details, check out Forbes' article on raising money from friends and family. 3. Crowdfunding platforms. Crowdfunding has become a popular way to raise money by appealing to a large number of people online. Platforms like Kickstarter, Indiegogo, and GoFundMe allow entrepreneurs to pitch their ideas and receive financial backing from the general public. A tech startup might raise $50,000 on Kickstarter by offering early access to their product as a reward for backers. Successful campaigns often raise between $10,000 to $500,000 or more. For more information, visit Kickstarter and Indiegogo's websites. 4. Angel investors are individuals who provide capital for startups in exchange for equity or convertible debt. These investors are often experienced entrepreneurs or professionals looking to support innovative ideas. For example, you might secure $100,000 from an angel investor in exchange for a 10% equity stake in your company. Typically, angel investments range from $25,000 to $500,000. For more information, you can visit AngelList or the Angel Capital Association. 5. Venture capital firms invest in startups with high growth potential in exchange for equity. VC funding is more substantial than angel investments and is suitable for businesses that need significant capital to scale rapidly. For instance, a startup in the biotech sector might secure $2 million from a VC firm to fund research and development. Usually, VC funding rounds range from $5,000 to $10 million or more. You can find additional resources on Crunchbase and the National Venture Capital Association website. 6. Traditional small business loans are a reliable way to get financial support for your startup. Banks, credit unions, and online lenders offer various loan products tailored to small businesses. For example, a startup might secure a $50,000 loan from a bank with a 7% interest rate to cover initial operational costs. Generally, loan amounts range from $50,000 to $500,000, depending on the lender and the borrower's creditworthiness. More details can be found on the SBA Loans and Lendio websites. 7. Government grants are an excellent source of funding for startups, particularly those involved in innovation, research, or social impact. Unlike loans, grants do not need to be repaid, making them highly attractive. For example, a tech startup receives a $150,000 grant from the Small Business Innovation Research or SBIR program to develop a new software solution. Grants can range from $10,000 to $500,000 or more, depending on the program. For more information, you can check out Grants.gov or the SBIR website at sbir.gov. 8. Business incubators and accelerators provide startups with mentorship, resources, and sometimes funding. In exchange for equity, these programs offer intensive support to help businesses grow rapidly. For example, a startup joins a 3-month accelerator program, receiving $50,000 in seed funding and mentorship in exchange for 5% equity. Funding from accelerators typically ranges from $20,000 to $150,000. Resources like Y Combinator and Techstars are great places to start. 9. Strategic partnerships involve collaborating with other companies or organizations to gain financial support, resources, or market access. These partnerships can take the form of joint ventures, revenue-sharing agreements, or co-branding initiatives. For instance, a startup partners with a larger company, securing $200,000 in funding and access to distribution channels in exchange for a revenue-sharing agreement. The value of strategic partnerships can vary widely, from $50,000 to millions of dollars. Resources like the Harvard Business Review's article on strategic partnerships can provide more insights. 10. Business competitions and pitch events offer startups the opportunity to win funding, publicity, and mentorship. These events are often hosted by corporations, universities, and industry associations. For example, a startup wins a $100,000 prize at a national business pitch competition, which also includes mentorship from industry leaders. Prize money from competitions can range from $50,000 to $500,000 or more. Resources like the MIT $100K competition and the Startup World Cup are excellent places to explore. Securing financial support for your startup in 2024 may seem daunting, but with the right approach and resources, it is entirely achievable. From personal savings to venture capital, there are multiple avenues to explore based on your business's specific needs and stage of growth. By leveraging the 10 methods discussed in this video, you can find the financial support necessary to turn your entrepreneurial dreams into reality. Remember, each funding source comes with its own set of advantages and trade-offs. It's crucial to assess your startup's goals and needs before deciding which option is best for you. With persistence and a well-thought-out strategy, you can secure the funding required to fuel your startup's success. To learn more about securing financial support for your startup, subscribe for further support, visit the provided links, and start exploring your options today. Whether you're just starting or looking to scale, there's a funding solution out there for you. Good luck on your entrepreneurial journey.